What's up, everyone? I'm Gary Dhindsa, where we talk Abbey condos and East Abbey real estate each week. Alright, in today's video, we're going to discuss Financial Literacy 101. My working definition of financial literacy is getting a basic understanding of how money works, how you can get your money working for you passively through investments like real estate and stocks. Achieving financial freedom allows you to spend your time and energy doing things that you want to desire. Everyone has a different reason for starting their investment journey. It could be having more money for retirement, saving more money for your kids' education, and it could be really anything. So the first thing that you want to know when you get started on your financial literacy journey is knowing the difference between an asset and a liability. An asset is anything that puts money into your pocket. A liability is anything that takes money out of your pocket. Example of an asset includes investments like real estate, stocks, gold, and cryptocurrency. Examples of a liability includes consumer debt, student loans, car loans, or anything Gucci in your closet that is collecting dust. There are two types of assets that you can invest in to achieve financial freedom. I personally invest in both types of these assets. The first type of asset is real estate. There's two reasons why I love investing in real estate. The first one is leverage. What I mean by leverage is, folks, you can do a down payment of 5 or 10% of the purchase price, and the bank will lend you the remainder of the amount. For example, if the purchase price of a one bath condo is $400,000 and you're doing a down payment of 10%, that amounts to a down payment of $40,000, and the bank will literally lend you the remainder of the amount. The second reason is price appreciation. Suppose you buy your East Abbey detached home for $1 million. After 10 years, the price of your home goes up by $400,000. All of the profit that you made at the point of time would be yours tax-free, as long as it's your primary residence. The second type of asset is stocks. This can be investing in individual companies or investing in low-cost ETFs. The two things that these individual companies and ETFs will have in common is that they pay some form of dividend for holding it. And I'm investing in the best of the best individual companies like Apple, Visa, Pepsi, Coca-Cola, Johnson & Johnson. If you're getting started in your investment journey in stocks, just buy and hold quality ETFs. That saves you a lot of time and energy not having to research these individual companies. The two things that real estate and stocks have in common is when you hold them is they pay you some form of payment for holding them. For real estate, you get a monthly check from your tenant, and for stocks, it's a quarterly dividend. Not only that, folks, but you also have the potential for price appreciation for both. The way investors and the wealthy invest, folks, they apply these three rules. The first rule is that they develop a long-term investor's mindset. What I mean by that is when they're investing in stocks or real estate, they're investing for the long term, a minimum for 10 years, if not longer. They're not day trading. If you are thinking of investing in real estate or stocks, it's very important that you develop a long-term investor's mindset. In order to achieve financial freedom, it's going to take about 20 to 25 years. So it's very important that you develop a long-term investor's mindset, but also to have patience. Number 2 is paying yourself first. Pick up any book on the subject of financial literacy, and one of the common themes you'll see throughout the book is a rule called paying yourself first. And what I mean by paying yourself first is, suppose you make a monthly salary of $4,000, you're going to set aside 10%. That amounts to $400. You can do one of two things. You can set that money aside to save for a down payment to buy real estate, or the second thing is you can use it to invest in stocks. The third thing is to take action. If you are paying yourself first each month, folks, keep taking action. Keep investing month in and month out. It doesn't matter if the stock market is in a bull or a bear market. It's very important that you learn these skills and share them with others. I didn't learn these skills until I had graduated university. I went both through high school and university without learning a single thing related to financial literacy. It wasn't until I picked up a book from the bookstore called Rich Dad, Poor Dad. This was one of the first books that I read on financial literacy, and I literally fell in love with the topic of money and how you can get your money working for you passively. So if you are interested in this topic, one of the best ways to learn financial literacy skills is through reading books. I'm going to put a link to a couple of books that you can read and check out. The other thing is watching other people on YouTube that have a channel on financial literacy. One that I really like to watch and follow is Minority Mindset. If you have any questions, please let me know. As always, I'm Gary Dhindsa, and I'll see you next week.